The market is more demanding than ever. Deadlines are tighter. Budgets are thinner. Expectations are higher. This is not the era of task managers. This is the era of project leaders. Strategy means nothing without execution, and execution collapses without leadership. So the question is not whether projects matter. The question is whether you're equipped to lead them. Welcome to Project Management Masterclass, where we sharpen the mindset, frameworks, and discipline required to turn strategy into measurable results.
I'm Brittany Wilkins, and this is Project Management Masterclass. It's a different day, but the same pattern persists. Another company is collapsing under pressure. Spirit Airlines is preparing to shut down. This is tough news to hear in this economy, especially about the jobs that will be impacted both directly and indirectly, and the consumers who made Spirit their preferred choice for their personal and business needs. Now, if you paid attention or followed this story, what came to mind for you when you first heard about this or when this first hit the headlines? They've been in business for quite some years. So do you view this as a business failure? I read the articles and said to myself, this collapse didn't start when the headlines hit. It started long before inside their execution system and their business model. And that matters. And why does that matter? Because the same pattern is playing out right inside an organization, that business that looks stable on the outside. And we think, yeah, they'll be around for a while. But inside, they are collapsing under pressure, and it just hasn't hit the headlines yet. So today, I kind of want to walk through and show you, how do we identify execution collapse before it hits our world and our projects and our businesses. Now, for context, I've never traveled Spirit, so I don't have the full experience of what it's like as a consumer to be part of their ecosystem. But from friends and colleagues, I've heard some pretty interesting stories. But from what I've heard and from what I've read is that Spirit built its edge. It built its business model on ultra low fares and fees. Being that cost-effective airline carrier partner for those seeking more cost-effective solutions to travel for their personal and business needs. And that worked when fuel was cheaper and competitors weren't matching prices. But you see what has happened. The environment has changed. And many of the larger airlines, we are accustomed to adapt it. And customers have gotten fed up with the experience. Seems like Spirit got away from customer centricity and why they started the airline, and margins disappeared. Now, here's the part most people miss. It's not that the model failed because it was wrong, but it failed because it only worked under specific conditions, when conditions are stable and predictable. But when things change or those conditions change, you become dependent. And that's not really a strategy or a long-term strategy for a business model, especially a business model that, prides itself on being the best cost at a lower efficient cost. And we always say you have to control what you can control. But, as we see in today's environment, there are external environmental factors that are uncontrollable and outside of our control. Those outside forces, whether it be political, economical, social, technology, legal, and environmental. And so when you look at it, it looks like that external pressure kind of really dismantled their business model, because when you see those jet fuel prices spiking, everything goes up. Costs increase beyond maybe what they've planned for, but also, too, if the recovery strategy was depending on those costs coming back down and those conditions really haven't changed, jet fuel prices haven't really come back down, then that really leaves the strategy in the business in a very fragile place. Because if one variable doubles in your business, that can really break your model. And the variable is not just a cost, it's vulnerability to the external environmental factors that we may not be able to overcome if things are not going back to the way they previously were and we're working under those conditions and assumptions. Then you look at their strategy when you look at the things that they were trying to do, trying to merge with another airline partner. That didn't go through. Looks like they're from financial standpoint that they did file, for bankruptcy. Internally, they also made decisions in cutting routes and reducing staff, as most companies do in unstable and unpredictable times. And even doing those things, they really couldn't stabilize and really get back over the hump. And so when I looked at and read their story, the one thing I took away is they had really no viable standalone strategy. Once consolidation failed or once they took those other measures to really recover, which means everything was dependent on one outcome. And when that outcome disappeared, so did their options. So, I guess the real question is not what's happened to Spirit and what's going to happen now that Spirit is leaving the airline industry permanently as they are shutting down their operations. But the question we have to ask ourselves, how do we know when our businesses and our systems is heading in the same direction? So in your current business environments, do you have a method? Do you have a process, system, framework, whatever you want to call it, in identifying execution collapse early? Early mean we are proactive in having a risk mitigation plan, or we wait till something happens and then we identify how we recover from the collapse. So I'm going to kind of walk through 3 indicators, and just keep in mind, every business is different. Every business operates in different markets and environments, and every business has a different indicator of whether they're meeting their financial performance, hitting their bottom line, or whether they are not. So these indicators that I walk through may or may not resonate. And also, too, even though the bottom line is the main indicator or driver of business success, there could be other small things when you're not as close to the execution system that may often get overlooked. But over time, when you go back and begin to do the root cause analysis, you begin to kind of see kind of the lead up or the build up to this has led us not to meeting our performance metrics. Indicator number 1 is decision lag under pressure. So typically you see when pressure increases, decisions in an organization or business should speed up. And yes, in some cases, they do. We move fast, we choose speed. But in some cases, you often see the opposite happening. And what you see is that there are more meetings, more alignment conversations, more waiting. And what do these 3 things do? Having more meetings, alignment conversations, more waiting. Decisions are taking longer than they should. And you may say, well, that's just the cost of doing business, or maybe that's normalized in your business. I don't see that as an indicator of our execution systems collapsing. Maybe think again, maybe not fully collapsing, but could it be a potential warning sign? Because decision speed is not just a leadership trait, not a people trait. It's a system output. So if your system requires excessive coordination to move forward, it can unlikely slow down your business and your operations exactly when speed matters most, especially in a crisis and needing to respond to that crisis. So the question to ask here, and the question to ask yourself, and the question to reflect on is, where are decisions currently slowing down in your organization? Because that's where pressure is already building. And as we know, again, we have in many of businesses and organizations, we know we have areas in our business that are not perfect, that are not as robust, but we have workarounds and we're still able to manage the problem. Yes, we're able to manage the problem today under these conditions, under these predictable assumptions. But again, that can change tomorrow, either due to some internal or external forces. So again, is there a way to go back and look at these decisions where they're slowing down and ask ourselves, if there were a crisis or if something were to happen, could this really impede our progress to responding and acting in a timely manner? Indicator number 2 here I want to discuss. I want to talk about breaking point, because every company has limitless potential to achieve and do whatever they set out in their business strategy and portfolio to do. However, we must know our limits. And many organizations don't know their limits, as many operate on assumptions like, we'll adjust if needed. Absolutely. True. There will be no need for adaptability, or we'll figure it out as we go. Absolutely. We can't wait till we have all the answers to respond or to begin executing on our strategy. That's what agility is for. But is this the case all the time? Should this be the case all the time? Do you see that as the go-to strategy for everything, and this is how our business runs? Or could this be a way that really exposes us? Because every system has a breaking point, and those breaking points could be cost thresholds, capacity limits, timeline compression. And if we don't define these in advance, you don't really control them. They are essentially controlling you, or can have your business in a chokehold when it matters the most, of not knowing the limitations of the business. And when you do discover them and discover them under pressure, it could be very expensive, a very expensive business lesson that could be hard to recover from. So again, in asking the question, do we know the exact point where our execution and business model could fail? And not just generally, but again, understanding, as I said back when I was talking about indicator number 1, we know some parts of our business are not as perfect or not as robust. But again, do we know why they're not as robust? And again, when the situations change, and if we don't have a mitigation plan for overcoming that, could this be the make or break situation for us? And just like, probably Spirit Airlines was over-reliant on a single outcome or a single thing happening. And that's indicator number 3, just over-reliance on a single outcome. This is where things can become very, very dangerous when organizations start depending on one outcome to survive. It's that deal going through, like Spirit Airlines, that merger that didn't go through, a project landing, waiting to get that outside project going, or waiting to get that outside capital to begin that project. Could be that market shift, which really out of our control, or maybe we know that shift is coming, but you get stagnant, you stop adapting, and what happens? You start just waiting, because again, you're relying on that single outcome. But as I see it, waiting is really the fastest way to really lose optionality. And once you begin to really shrink your options and just rely on single outcomes, recovery becomes very unlikely. And that's when the pressure has just really magnified and just boiled over. And you can see that's what happened here in the case of Spirit. Now, again, don't know all the details or the behind the scenes of what's happening in Spirit, just what's been exposed in the headlines. So just another key question to reflect on here. What outcome is your organization quietly depending on right now? And if that outcome does not happen, do we have a plan to adapt? What is the plan to move forward? Now, when you begin to kind of look at, okay, do we understand execution where it could collapse? Again, it all goes back to looking at where is pressure increasing and why is it necessarily increasing? Where is it most chaotic right now in our organization or business? And what is the cause for that stress or that strain? Where are decisions kind of slowing down and impeding us for hitting our metrics or our KPIs? And where are we unclear about our limits, or where we've kind of just managed the problem but not really solved it and just dealing with it as it is? And where are we really kind of baking on what is our big bet, but are we too narrow with this big bet, and should we really look at other outcomes or alternatives if this big bet doesn't necessarily pay off? Because some of these may be irreversible to do, maybe especially in the time of need or crisis, to do them. And by the time, leadership recognizes the severity of these things, the system can already be too constrained to recover. So as you think about Spirit Airlines, like I said, maybe you read the headline, maybe not, maybe you read it and you just said, like me, different day, same stuff, businesses come and go all the time. But have you really stopped to ask yourself, what does this mean for me? What does this mean for me? What does it mean for our business? What does it mean for our what does it mean for our organization? Not everybody may not be in the airline business, and during these times, business may be good for you depending on, the market and what's things going on. But again, conditions could change. So what can you do with this and utilizing Spirit Airlines as a case study for business success or case study for business failure? Well, first, again, I always go back to, are we proactive or are we reactive? Do we wait until there's a problem? Well, depending on the problem, if we have a system to determine what problems do we focus on, or those are urgent, and we know that may come up, but we've assessed that based upon some thresholds, not completely urgent to address at the moment. But here's the one key thing to do is to always have an awareness in your system, in your business, and the operations. And here are some things that you could potentially, do that. Again, it does require some effort. It is going to require some more alignment meetings maybe in the beginning, but if we take the extra effort now to do those things, then later, so that meeting cadence and that dependency on the line begins to reduce. So here you may be, as a practical application, maybe map your decision bottlenecks. Do you know what the bottlenecks are? And again, oftentimes in our mind, I know we know what the problem is. We see the problem, we see the constraints, the bottlenecks, and we kind of see, how it can navigate. But where understanding and mapping those out, you may have that understanding, a business unit may have that understanding, a department, but across the business, we fundamentally have that understanding of where it impacts. So where does work slow down and when does it need approval? Again, not just the theory of it and not just what's in our minds, but in the reality. And then is that in such a place that everybody understands what they are, because that is truly where execution risk really lies. Also, too, is really defining the pressure thresholds and asking, key questions. What happens if our primary costs doubles? And of course, we have business and costs, analysts probably looking, at this every day and studying the trends, but also too, how do we stay on top of this? And again, how does it impact our current execution system and our business models? And what happens if timelines are compressed by 30%? Because we know business is run, by operations and projects. So if we begin to compress these timelines, do we really know what can be impacted and how robust is it? And if we can't really answer that clearly, do we really have I like to call it, again, you often hear me say, a robust system or a resilient system that can withstand when pressure starts to hit? And we know anything in business is always dependent on something. But do we really know what all the dependencies are and we've identified all those dependencies. So again, I would say identify your hidden dependencies. What are you relying on that hasn't quite happened yet? Could we call that out? Could we map it to our decision bottlenecks and could it help us really define our pressure thresholds even better and looking at the numbers and looking at the analytics? But again, it's important to really call it out because dependency without contingency is a risk. And really overall looking at, I know many companies we've always had a risk mitigation plan, and that has been done very early at the beginning of the project. Again, when there have been known assumptions and known thresholds and known performance metrics now. But as time evolves, as things goes on the market, do we again keep that as a living document or just something we do once to identify that, and then when problems arise, we address those as they come up? How I look at it is that Spirit Airlines is really not an isolated case. It's a visible example of something that happens every day, but over time it starts to build up into something bigger. And then you see it come out visibly, loudly. Now, may it always hit a headline or hit major news. The execution systems and business, they don't fail because people are always working. People are always working. People are always showing up to deliver value and to drive business results and business performance. But what you see is in execution systems failing is that, are they built up enough to adapt under pressure and knowing where pressure may or may not break? That's why I said earlier, really mapping out those decision points and understanding those pressure thresholds and how that all kind of ties together into the contingency plan. And sometimes, again, let's wait and see what happens. But until then, let's just focus on, where we're trying to get to, where we're trying to drive to. That's most companies approach and focus. But sometimes by the time these things become obvious, it's already too late. And then looking back as you go do the root cause analysis and you really get to the root of the problem, you say, then sometimes you always ask, could that have been avoided earlier if we just took the time, or if we didn't gloss on it, or if we really looked into or had a evaluate, or like I said, had an evaluation system or indicators that would have led us to taking care of this or being able to navigate this sooner or not later. So again, looking at the key question, if your primary costs double tomorrow, what happens to your execution plan? If that question is difficult to answer, it's really not a gap. It is really a signal. And the gap must be closed to address if it's already not being addressed. So if you're saying, I don't know where to start or just even at a high level, where do I start to begin to kind of articulate this to really understand where execution could collapse across people, process, and tools? If you want to go deeper in how to access and strengthen your execution system, start with the execution intelligence assessment, because the goal is not to react to pressure, it's to be built for it. Thanks for listening to today's show. This has been Project Management Masterclass. Be sure to continue to drive project and business success.
Execution separates professionals from leaders. Stay disciplined, stay intentional, stay sharp. This is Project Management Masterclass.